Hello there, welcome to Lecture Series 4. Here I will look at IAS 40, Investment Property. Properties are tangible assets and fall within the scope of one of the following accounting standards. Properties fall within the scope of IAS 2 inventories if the property is held for sale or in the process of construction for sale in the ordinary course of a business. An example of this is an apartment development constructed and held for sale in the ordinary course of business by a property developer. On the other hand, property being constructed or developed on behalf of third parties would fall within the scope of IFRS 15, revenue from contracts with customers. Property leased under a finance lease to another party falls within the scope of IFRS 16, leases. Next, we will look at when property will fall within the scope of IAS 16, property, plant and equipment, and IAS 40, investment property. An item of property falls within the scope of IAS 16 if its owner occupied. This includes property held by an entity for production or supply of goods or services. Examples include warehouse space held by an entity for storage of its inventories, or factory building held and occupied by an entity for manufacturing of its goods. Secondly, property held for administrative purposes, for example, office space held and occupied by an entity for its accounting department, also falls within the scope of IAS 16. Property held by an entity that is rented out to its employees is deemed to be owner-occupied and therefore also falls within the scope of IAS 16. IAS 16, property, plant and equipment, recognition and measurement principles were covered in Lecture Series 3. A property falls within the scope of IAS 40 if the property, meaning land or building, is held by an entity or is a right-of-use asset held by a lessee to earn rental or for capital appreciation or both. Examples include land held for undecided future use or buildings leased out or held to be leased out under operating lease. Property being constructed for use as investment property also falls within the scope of IAS 40. IAS 40 recognition criteria mirrors the recognition criteria of IAS 16 property, plant and equipment. That is, it's probable the asset's future economic benefits will flow to the entity and the cost of the asset can be measured reliably. Likewise, IAS 40's measurement principle is also broken down to initial measurement being measurement at recognition date and subsequent measurement. Investment property is initially measured at cost. Cost includes purchase price and directly attributable cost. Examples of directly attributable costs are professional fees for legal services and property transfer taxes. IAS 40 specifically excludes the following from the cost of an investment property. 1. Startup costs, unless incurred to bring the property to the condition necessary for it to be capable of operating in the manner intended by management. 2. Operating losses incurred before the investment property achieves the planned level of occupancy. 3. Abnormal amounts of wasted material, labor and other resources incurred in constructing or developing the investment property. In the next part of Lecture Series 4, I will look at subsequent measurement and transfer to and from investment property. Till then, thank you and have a pleasant day.